$1.56 adjusted EPS. Street was looking for $1.48. Revenues seem to come in line, maybe a hair shy. The outlook does look to be okay. 225 billion, 2.25 on the upside for next quarter. Street was looking for 2.23 for the fiscal year. They're extending it a little bit, but not a lot, Caroline. It's basically a continuation of what they told us last time with a little bit extra on top.
Yeah, it does look like a little bit of a revenue miss, though. I mean, it depends how far out in the terms of the decimal points you're looking, I suppose.
Yeah,
but just taking a look, I am seeing shares lower. I mean, I do think it's important to note, as I said, shares are up 8.5% this month, up about 32% year to date. So could be a bit disappointment if you look too past the decimal point. I'm just looking at some of the commentary because I believe you gave the guidance there. We're seeing a growing market realization that platformization is the game changer that will solve security and enable better AI outcomes. I expect this to be a multi-year trend for which we are best positioned to deliver to our customers. So sort of similar to what we heard from the company when it last reported. Also approved a 2-for-1 stock split I'm seeing across the wires. So in terms of the actual results, I would say earnings beat in line. And then in terms of the guidance that you offered, seems like it's not enough to at least impress investors right now based on what we're seeing in terms of the stock reaction.
This could be interesting. Looks like we might be getting a little financial engineering. 2-for-1 stock split. Palo Alto approves. What do you think, Kevin Green? I mean, $400. I guess that makes sense. A little cheaper for us to trade.
Yeah, and sometimes we've actually seen a nice little boost for the stock after this is announced, even though it doesn't fundamentally change the company's financials. But it might be something that some shareholders might be looking for as far as their portfolio. The one thing that I'm looking at is the remaining performance obligations. That came in at 20% on a year-over-year basis. I believe that came in a little bit light. I think the street was looking for around 22%, if I'm not mistaken. So I think that's also kind of leading credence to that guidance moving forward. Maybe not as strong as what the market would have hoped. And then also that backlog of that ARPU number coming up a tad bit light, maybe another reason why we're seeing some selling when it comes to shares.
Okay. Yeah, it'll be interesting to see if they kind of get that split bid. That's kind of been like meme kind of low bar, but I mean, it's happened with big companies too, I guess. So we'll see.